2020 was a roller coaster year if you were invested in the stock market.
It was a doozy.
And 2021 is going to be another roller coaster if you are or are planning on investing in the stock market. In this video, we'll share 5 ways you can prepare for the next market shift and how you can take advantage of the market if a crash happens again. Let's go ahead and get started. Hey guys, welcome back to our channel. We're Elma, Jerwin, and Siopao. We're 2 Asians and a dog. Our channel is about sharing our journey to reaching 8/12/2024, which is our retirement date.
In our channel, we'll cover real estate investing, financial education, and stock market investing as well. So make sure you join us to our path to 8/12/24, which is our FI date. And stay till the very end for Siopao's tip of the week.
First, you need to have a plan, and most importantly, stick to your plan. If we learned anything from 2020, we learned why it's so important to have a long-term plan. As you guys know, our plan is to be financially independent by 8/12/2024, which is less than 4 years from now. Our investment strategies are aligned with that date in mind. That being said, having a plan doesn't have to be complicated. Based on your plan, you can allocate your investments appropriately. For example, if you have a long-term time horizon, then having a higher allocation for riskier assets such as stocks or real estate makes sense.
Service announcement: we're not financial planners, but if you guys have any questions at all, feel free to reach out to us. We will answer any questions to the best of our abilities and experience. I was helping clients with their retirement planning when I was working at the bank, but today I no longer have my Series 6 or 63 license. So any advice we give you, we recommend you to check in with your own financial advisor or accountant. As of today, we are just 2 Asians and our dog on YouTube. To piggyback off having a plan, you must now stick to it. By sticking to your plan, you're less likely to panic sell if or when the market crashes. With information flying in all directions, now is the time to stay focused and not get distracted. This advice, though, is definitely a lot more difficult to follow. As you surround yourself with more financial information, you will be seeing so many different opinions and advice from so many experts. And yes, that includes us. We know that there are a lot of YouTubers out there giving financial advice, but honestly, majority of them just research it and are not actually practicing or investing themselves. So we must all be careful what kind of information we take in. I'm sure you guys have also watched Graham Stephan. I personally think he is one of the better channels out there. A lot of things he says, he is actually doing. So the information he relays over to us is from first-hand experience. Now, we are no Graham, but I feel like the information and advice we give are also first-hand experiences as well. This is why we only cover topics that we have personal experience in.
One of the crucial things 2020 highlighted was the need for an emergency fund. With millions of people losing their jobs and having little to no money saved, it left them in a state of panic. The worst time to take funds out of the market is when the market is down. And when you have an inadequate emergency fund, you may be forced to sell at a loss to pay for necessities. We mentioned in our previous video 7 fatal mistakes to avoid. We'll link it below. We don't recommend investing until you have an emergency fund. If an emergency does happen and you have to liquidate some of those investments, you would have to sell at what price that stock or fund is at. We expect the 2021 market to be very volatile, and usually when an emergency does happen, it literally happens during the worst times. Also, if that position has been invested less than 12 months, you will be taxed short-term capital gains, which for some people could be as high as 37%. Now that would really hurt.
With that being said, nobody knows your own personal finances other than yourself. For some, your emergency fund may only take a few months to save for, and for others, it may take 12 months or more. At the end of the day, investing in the stock market has risks. And if you plan on investing, make sure you have a parachute just in case the plane goes down. You guys know that quote, knowledge is power? Or how about the more you read, the more things you will know. The more you learn, the more places you'll go. Well, that last one was by a famous doctor, Dr. Seuss. This is our 3rd lesson. Read, learn, and educate yourself in taking as much information as you can. You watching us right now is a great first step. but make sure you have a second and a third step plan.
Today, 2021, there is so much resources available to us and learn anything. You don't even have to buy books anymore. This means we want you guys to learn as much as you can about investing. Like we said earlier, YouTube is a great platform to start with. There's even audiobooks you can borrow from your local library, which we personally just discovered during COVID times.
If you're saving for a house to buy in 2021, don't invest in the stock market at all. Quick plug, if you plan on buying real estate anywhere in the US, let me know and I can tap into my network of real estate agents to help you out. Now back to the video. Just like real estate, the stock market is also a long-term play. Granted, it could be way shorter than investing in real estate, but in general, you should be investing for several years. Knowing this, if you have any plans on taking advantage of the low mortgage interest rates by purchasing a home, do not invest in the stock market. Yes, we said do not invest a single dollar of your down payment, of your loan, or closing costs. And not just down payment, you also have to make sure you have extra funds for your after list. Check out our video on what they don't tell you about buying your first house. We'll link that below if you want to know more about what is an after list and the closing costs when purchasing a home. Let me actually show you, or actually tell you an example. Say you invested $10,000 in March, and by August, which is the time you plan on buying a home, it's going to $15,000. That's great, right? You have $5,000 worth of growth. Now let's say you get taxed short-term capital gains at 37%, and then your tax bracket at 10%, which in total could be 47%. Now that $5,000 would actually be only $2,650, which is still a lot of money, right? But what if it went the other way? What if your $10,000 becomes $5,000 from March to August? Now your down payment is only $5,000, which probably means you won't be able to afford that house that you want to buy. Moral of the story is that when planning on purchasing a home, do not gamble with your money. Just wait and be patient and focus on buying that first home. Because at the end of the day, we all have to live somewhere.
Lastly, have cash on hand. It wouldn't be a bad idea to have money set aside specifically ready to invest should the market crash. With the potential market crash coming, there are going to be some great buying opportunities. Prices going down will allow you to buy at a discount, but only if you have enough cash on hand. And don't worry about trying to time the market. Honestly, as long as you buy at a discount, it's still a win. Timing the market is not a game we recommend. We always invest for the long term.
But what happens if all your money's already invested? Well, I'll tell you what we're going to do personally. As you guys know, we have several shares of Tesla. And yes, even though Tesla has gone down quite a bit.
You mean a lot.
A lot. We have still made quite a bit from it. So our plan is to sell a few shares so we can have some liquid to purchase other stocks when they go on sale. If you have any positions that has done extremely well for you, maybe take a small percentage and sell it so you can have additional funds available to you. With those funds, you can diversify your account and purchase other stocks, ETFs, or mutual funds.
The stock market is not as scary as it seems. Spending a little bit of time researching, reading, and learning will make it even less scary. Make sure you create a plan and follow your instincts and just be patient. You'll see massive returns on your investment if you can position yourself to take advantage of the market while it's down. All right, so that's everything we have for you guys today. If you enjoyed watching this video, please don't forget to hit that thumbs up button and subscribe to see more videos on personal finance, real estate, and stock market investing. Now it's time for Siopao's tip of the week.
Siopao's tip of the week. When we talk about investing, please don't forget about your 401k. Make sure you at least take a look at your allocations and the percentage you're contributing.